The Philippine Stock Exchange is the only equities exchange in the country. It is one of the oldest stock exchanges in Asia, tracing its roots from the establishment of the Manila Stock Exchange in 1927 and the Makati Stock Exchange in 1963. The two exchanges were unified in 1992 to form the PSE we know today. The PSE is a venue for companies to raise capital for business expansion. More than 280 companies are currently listed on the stock exchange. The PSE also serves as a marketplace for investors looking to invest in equities. Stock investments have the potential to grow over time through price appreciation and dividends. The PSE helps maintain a fair and transparent market through its continuing disclosure requirements for publicly listed companies. Meantime, its independent subsidiary, the Capital Markets Integrity Corporation, oversees and regulates trading participants. Investors who would like to invest in stocks will need to open an account with any of the PSE-accredited stock brokerage firms. Visit the PSE website at www.pse.com.ph or follow our official social media accounts to know more about raising capital and investing in the stock market.
Why do we go beyond being just an online stockbroker? Why do we educate millions of Filipinos how to better their lives? Why do we share our expertise? Why do we keep coming up with new ways to empower you? It's because we believe that every Filipino deserves to be rich. This is our why. It's why we do what we do with passion and integrity at all times. It's why we're committed to guide every Filipino in every step of their investing journey towards a richer and better tomorrow. COL Financial for a richer life.
Dati may pinasok kaming deal, kaso we didn't know any better. We trusted too early. 2 beses yun, and we lost a total of 1 million pesos. Wala talaga lahat. Siyempre may mga anak kami. Para sa kanila lahat ang pinagtrabahuhan namin. Pero kahit anong mangyari, kailangan namin bumangon. Wala kaming choice kundi magsimula from scratch. Matagal bago kami nag-trust ulit. Na-realize namin na dapat naiintindihan naming mabuti kung ano ang pinapasok namin. Dapat doon talaga kami sa trusted expert na. Sa dinaanan ba naman namin, ang hirap mag-trust ng pera ng basta-basta lang. Pero sabi ng husband ko last year, dapat yung pera namin hindi nasa bangko lang. Nag-research talaga kami ng paglalagyan ng pera at nagtanong sa mga kaibigan. That's how we found COL. Nalaman namin na COL is the largest and well-trusted when it comes to online investing in the stock market. Mutual decision namin ng asawa ko na mag-invest through COL. Yung asawa ko, mas active sa pag-trade ng stocks at nasusundan niya ang mga recommendations from COL experts. Ako naman, Iba yung feeling ng security na bigay ng COL sa buong pamilya namin. Nakakatulog kami sa gabi ng maayos at hindi nagwo-worry na bukas mawala na naman yung pera namin. May future ng mga anak namin, pati kaming mag-asawa na rin. Para sa akin, a richer life is not all about financial stability. It's having one's peace of mind and a sense of security. Ultimately being contented with what you have. Mas panatag ka kung alam mo may nakatago kang pera at may hugutin ka balang araw.
I'm Ben Volante Barrett, Rich and New Beginning.
Good afternoon, everyone. Welcome to our special webinar entitled Earn Passive Income Through Dividend Investing. I'm Cami from PSE's Market Education Department, and I will be your host for this webinar. So before everything else, allow me to greet everyone an exciting and fruitful Financial Literacy Week. For the sixth straight year, PSE ranked the bell for financial literacy. This bell-ringing event is an annual global campaign spearheaded by the World Federation of Exchanges, which PSE is a proud member of, to raise awareness about the importance of investor education and protection. To complement the bell ringing event, we scheduled other FinLit related activities, including quizzes and questions we post on social media and by hosting webinars. This year is no exception, as we aim to strengthen your financial skills to ensure smart money management. Join us in the next 1 hour as we discover the importance of investing in dividend paying assets and how we can use this to obtain a reliable and passive income stream. So for today, we invited a special guest from one of our PSE accredited stockbrokers, COL Financial, to give us a deep dive into the available income paying stocks and funds. The practical strategies on dividend investing can help you achieve your financial goals. Perfect po itong webinar na to for investors who are still looking to explore different investing strategies, those who are looking to expand their portfolio, and those who prefer to earn passive income from investments. So with that in mind, we hope that you listen well to our special guest from COL, who you will be meeting very soon. We encourage everyone to actively participate in our session today. Huwag po kayong mahiyang magtanong anytime during the webinar. You can type your questions in the Q&A box. Gusto nyo man mag-share ng experiences and insights, feel free to do so in the chat box. All right, so here are a few reminders before we start the program. This webinar is recorded. Only the speakers and their presentations will be visible throughout this session. Ensure that your internet connectivity is stable and refrain from opening multiple browsers or downloading any programs to avoid disruptions during the session. Your microphones are disabled. However, this should not affect your ability to listen to the speakers. Please remember to check the volume control of your device. We enjoin everyone to actively participate during the live Q&A segment. Participants in Zoom may type their questions in the Q&A box, while Facebook live stream viewers may type their questions in the comment section anytime during the webinar session. We have a set of panelists in the backstage ready to answer your questions in the Q&A box. After the presentation, we will take some of your questions live. We would also like to remind you that this webinar is for educational and informational purposes only. This should not be construed as a professional, financial, or investment advice or recommendation from the PSE. So we hope that everyone's ready because we're actually finally getting this webinar started. So to get to know everyone today, we want to kindly request to answer the following poll questions. This will help us learn more about what you guys already know. Okay, so first question. How available are you with dividend investing? A, very familiar. B, somewhat familiar. And C, not familiar. So we'll give you guys a few seconds to answer. So I'll count 10, 8, 7, 6, 5, 4, 3, 2, and 1. So let's end the poll and let's see the results. So 12% are actually very familiar with dividend investing. Majority of you guys are somewhat familiar. And around 21% are not familiar. Hopefully, after this webinar, most of you will have a deeper understanding on what dividend investing is. So let's proceed to our next question. How often do you invest? First option, I immediately invest every time I receive my pay or income. Next, I only invest when I have extra money. And next, I don't invest yet, but I will start soon. So I'll give you guys some time to answer the poll questions. Okay. So I'll count to 10, no? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, we can close the polls and then let's see the result. So most people only invest when they have extra money, while 27% immediately invest every time they receive pay or income, while 24% don't invest yet but will start soon. So thank you so much for answering our poll survey. Ilan na kaya ang kasama natin live this afternoon? So we have over 400 live attendees. Hopefully more attendees join us in the next few minutes. Very important and interesting yung topic natin for today. So to everyone joining us right now, thank you for choosing to invest your afternoon with us. So without further ado, let's get to know our wonderful speaker today. Ms. Joyce G. Chan is the Vice President and Head of Client Services and is one of COL Financial's trainers. She started at COL in 2010 as a sales manager, where she has since led both the sales and customer support teams. In over a decade, she has educated thousands of Filipinos on how to invest in the stock market. Joyce holds a Bachelor of Arts in Communications degree from the Ateneo de Manila University. He is a certified securities representative, certified investment solicitor, a fellow in the Life Management Institute with honors, and a certified UITF salesperson. So everyone, please join me in welcoming Miss Joyce G. Chan. Hi, Miss Joyce. Good afternoon.
Good afternoon and good afternoon to everyone. Thank you again for investing your afternoon with us, and I will be your speaker for the afternoon.
Okay,
So,
Miss
Cami,
Joyce, so the floor is yours.
okay, thank you very much. So, let me just share my screen with everyone. Okay. Okay, here we go. So, again, good afternoon, everyone. And today's session will be earning passive income through dividend investing. Okay, so again, my name is Joyce Chan. Feel free to ask any questions that you have on the Q&A tab. And before I start this webinar, may I just request for everyone to please prepare a piece of paper, any writing materials, and calculators if you have them. Now, if you don't have any calculators, just a smartphone with a calculator app can also do. Okay, so the reason why I'm asking for these materials is because I really believe that whenever we're going through a webinar like this, I also like to make this as a practical workshop as well. So that at the end of my session, I hope that everyone will be able to actually compute which investments will give you quite good dividends and how much it would actually give you in return. Okay, so let's start. Okay. Now, to start my seminar, I would like to ask everyone this question. As you can see, there's a apple tree in the screen. Now, what I would want you to think about is how will you harvest the fruits in this tree? Think of your strategy of how you will get these fruits. Okay, so I'll give you like a few seconds to think about it. Okay. And then now I'd like to release a poll question for everyone. Now, I'd like to ask you, how many strategies did you come out with? Okay, so your choices are none, one, two, or more than two. So just vote, click which one, how many strategies were you able to think of? And then I'll also show the results of this poll for everyone. Okay, so let's end the poll, and I'd like to show everyone, okay, the poll results. Okay, so I'm happy to see 41% of you thought that I know you thought of more than two strategies of getting the fruits from this tree. 36% have two strategies, 21% have one, and then only 3% have none. Okay, now the reason why I am asking this is because, okay, like any strategy, when it comes to investing in the stock market, I am glad to say that there are more than two, or there are two strategies that you can use to invest in the stock market. So whenever that you're thinking of how to harvest the fruits in this tree, always think that there can be more than one strategy. Here, I will be talking about price appreciation and especially the dividend side. These are the two strategies that you can think of when investing in the stock market. And the really good thing about it, it doesn't have to be either or. Hindi nyo po kailangan pumili one or the other. You can actually do it both at the same time. And that is what I'll be teaching you today. So I'll be teaching you dividend investing. So what exactly is dividend investing? And I'm pretty sure you've heard about this. Narinig nyo na yan na ano ba talaga itong dividend investing? So dividend investing, in the most simplest term, is choosing investments that actually give out dividends. So what are dividends? Dividends are extra earnings that company have that they like to give to their shareholders. Okay, so below here on the screen, you will see that there's a sample dividend calendar. And you can definitely see this if you have a COL account, or you can go to the PSE website and see this calendar. So let me just go over what the calendar actually say, and then I'll tell you what are the important things to remember when looking at this calendar. So let's start with the leftmost column. So here you will see the stock code. Stock code would mean that these are the companies that have declared the dividend. The type, there are usually 3 types of dividend, but the most common is cash, meaning they'll give you excess cash outright. So here, let's go for the first row. It says here that BDO had declared a cash dividend of 1 peso per share that you have. It has an ex-dividend date. X would stand for expiry dividend date on June 10, 2024. Record date is when they actually write this down on their books on June 11, 2024. And payable date is when they'll release these funds to you on June 28, 2024. Now, I've worked in customer support for more than a decade already. And the one thing I'd like to emphasize is really the ex-dividend date. Now, why am I going to emphasize here? It's because I do receive a lot of questions such as, bakit ba importante tong dividend date na to? This ex-dividend date means this is the expiry date on the stock. So think of it like an expiry date on a loaf of bread. Pag sinabi na pagbibili mo tong tinapay na to, expired na siya on June 10, 2024, you have to eat that bread at least a day before. So for you to get a dividend of BDO, you should have the share on June 9, 2024. Now, very important yun, it is because I do get calls, clients asking us like, oh, how come hindi ako nakakuha ng dividendo sa BDO? And only to find out that they actually bought it on the X date itself. They bought the stock on June 10, 2024, thinking that it is a deadline. But please take note, it's an expiry date. So that means on June 10, expired na siya. So you should have had it the day before to be entitled to the dividend. Okay. So here I also have some examples such as C-REIT. This is Citicorp REIT, and they gave out 0.049 in cash with an X date on June 11. And then there's another stock here, which is PRF4C. This is actually Petron Preferred Share Series 4C that gave out 17 pesos and 71 cents per share that you have. Also declared on June 11, 2024. Yeah. So why is this calendar important? It's really for you to anticipate whether a company is giving out dividends. Now, just in case na-miss nyo na yung ex-div date, kasi ngayon, October na, di ba? Tapos sayang, gusto ko sana yung BDO dividend na yan. So what you can use this as well is to see which companies are actually giving out dividends. This is actually a good indicator whether a company is healthy enough to have excess funds to give to their shareholder. Okay, so now that I've explained the sample dividend calendar, let's have a little pop quiz, shall we? Okay, so I need you to come out with your pen and paper and your calculator, and I have 3 questions to ask. In these 3 questions, answer the best you can so that I have an idea whether there are some things that I have to emphasize or go over again. Okay, so question number 1, so take your time. The question is, to be entitled to receive C-REIT dividends, when should you have the shares? So again, take a look at the sample dividend calendar below. Okay, so the question is, to be entitled to receive C-REIT dividends, when should you have the shares? So on your piece of paper, kindly write down the letter of your answer. So is it A, June 10, 2024, B, June 11, 2024, C, June 13, 2024, or letter D, July 9, 2024? Okay. Now, let's go to the second question. So for now, just write it down on your piece of paper. We'll tally our score afterwards. Okay, question 2. If you are a Filipino citizen and you have 1,000 shares of BDO entitled to dividends, how much dividends net of taxes will you receive? Okay. So again, if you are a Filipino citizen and you have 1,000 shares of BDO entitled to dividends, how much dividends net of taxes will you receive? So take a look at your sample calendar again, and then choose your answer. Is it A, 1 pesos, B, 900 pesos, C, 1,000 pesos, or D, 1,100 pesos? So this one, I'll give you a few more seconds because you might need to calculate a little bit. But your choices again are A, 1 peso, B, 900 pesos, C, 1,000 pesos, or D, 1,100 pesos. Okay, now let's go to question 3. Okay, question 3 and the final question. What is the earliest date can you sell your PRF4C and still receive the dividends? Meaning, kailan nyo pwede ibenta itong stock na to, pero meron pa rin kayong dividendo? Is it A, June 9, 2024, B, June 10, 2024, C, June 11, 2024, or D, July 8, 2024? Okay, so please take a look at your sample dividend calendar below. And don't forget, we are asking about PRF4C. When is the earliest date you can sell PRF4C and still get dividends? Okay, so write down your answer. So you should have 3 letters on your piece of paper. Okay, and now I will reveal the answer, and please score your answers accordingly. Okay, so here are the results of the pop quiz. So for question 1, the correct answer is letter A. Now, why letter A? It is because when should you have the shares? The day before the ex-dividend date. Ayan. So if the ex-dividend date is on June 11, you should have had it on June 10, 2024. Okay, question 2, the answer is B. Now, why B? It is because BDO is giving 1 peso per share. If you have 1,000 shares, so that's 1,000 times 1 peso. And then if you are a Filipino citizen, you actually have a 10% withholding tax. So multiply this by 90% to get your net dividend share. And that would be 900 pesos. Okay. Now, for non-Filipino citizens who are residing overseas, usually the withholding tax is 25%. But for those residing in the Philippines and are Filipino citizen, it is 10% withholding tax. And then finally, for question 3, the correct answer is letter C. What is the earliest date can you sell your PRF4C and still receive the dividends? You can actually sell it on the ex-dividend date kasi expired na siya. So that would be on June 11, 2024. Okay, so now give yourself a score. Are you 3 over 3, 2 over 3, or 1 over 3? Yeah. So I'll have a poll question that will pop out, and please choose what is your score for this pop quiz. Now, don't worry. This score will only just tell me if I will have to go in depth on certain areas, okay? Or will I go through this faster because majority of you have actually gotten it right, right? Okay, so once you have answered the poll question, okay, we'll close this and we'll show everyone the result. Okay, so it says here that 45% of you scored 2 out of 3, 32% scored a perfect score, and 23% scored lower than 2. So for those who got lower than 2, just review the answers so that you can start getting those dividends. And don't worry, I'll give you a handout of this one. Okay, so for those 2 out of 3, you got a new learning today. And then for the perfect score, you definitely know your dividends. So we'll go through it. But I'm happy to say that majority of our participants got 2 out of 3. Okay, so which tells me that you are quite an advanced participant. Okay, so that I'm hoping to tell you everything that I know about dividends. Okay. Now, let's go now to the next. Okay. Sorry, wait lang. There you go. Now, for dividend investing strategy, what you're going to do if you want this for your investing journey is that if you're going to invest for price appreciation, this means when you buy something low and sell something higher, and then you're going to invest something for dividends. Dividend investing is actually the merging of both, wherein you need to buy investments that not only give you dividends, but eventually will give you price appreciation as well. So that is why this strategy is quite powerful, because it is two strategies in one, and wherein you are earning not only through one, but both as well. Now, why is this important? Why should we consider dividend investing strategy? It is because from experience as well, when markets are tough, dividends can actually help you through. Now, the chart that I have here is actually one of the company. This is one of our telco companies, wherein, as you can see, a telco price doesn't just go straight up or straight sideways. Sometimes it can go up, it can go down, sort of like a roller coaster, and it actually gives you a roller coaster of emotions as well. But as you can see, for every arrow that you see below, this is actually how much dividend that they gave for every share that a shareholder has. Okay. So a good thing about this is that even though when the stock price is going low and then you are actually quite stressed and you're worried about your investment, that dividend that they are giving out will actually tide you through. It will help you weather the storm. So these dividends are actually a way also for companies to pay out to their shareholders to reward them for keeping the shares. So who else use dividend investing? Actually, it's just not retail investors who use this as well, but also other professions, especially fund managers. So as you can see here, I have a sample of funds or products wherein their strategy is really dividend investing. As you can see, Phil Equity, Manulife, even Schwab, Vanguard, all these different fund houses actually uses dividend investing for their own fund products. Okay? So if you're going to look at the fund names, you'll see there's a lot of dividend, high dividend, or dividend REITs. It's because these are the investment that gives dividends to them, and they want that inside their investment portfolio. Now, what are the risks? Siyempre, with everything naman, hindi naman ito lahat all good. There are also some risks that you should take into consideration, such as there are some companies that can opt not to give out dividends. These are companies that it can be that they are just starting and they need the capital to make their company grow further, or it can be a company that is in distress and have no excess cash to give out as dividends. Another risk can be that companies can actually cut down on their dividend rate. The dividend is not mandatory, meaning hindi yan fixed and hindi yan binibigay all the time for some companies, only when they have excess. So when markets are tough, when economy is tough, sometimes they can cut down on the dividend rate. So if, for example, if you're used to getting 1 peso per share, but then suddenly this company have encountered tough times, they might cut it down to 50 cents per share. Yeah. So these are the risks. So therefore, it is very important to choose the tree which you will stand under. That is why I'll be talking about the 4 options that you have if you want to use dividend investing. So the four options that you can look into are these four different types of investments. First is common shares. Second are REITs, or REITs will stand for Real Estate Investment Trust. You have preferred shares, and you have dividend paying fund. Okay. Now, out of these four, I like to send out a poll question. Which among these are actually what you like to learn more about? Meaning, which one are you most interested in? Because your answer here will guide me which one should I talk more about. Okay? So which investment are you most interested in? Which one would you like to learn more on? Yeah. So give your choice here. Okay. Then, once everyone is done answering this, we'll close the survey and show it to everyone. Okay, let's show the survey result. Okay, so majority, 42% are saying that they are interested in a dividend paying fund. Okay, so definitely a lot of time here. And then 33% are for REITs. Okay, so I'll tackle these two more in depth with common shares and preferred shares following after. Okay, thank you everyone for answering this poll. Okay, so now let's go through common shares first, REITs, preferred shares, then dividend paying fund. Okay, for common shares. So what exactly are common shares? This is when a company, small company, or it can be a big company that needs capital. And there are ways wherein a company can get capital to expand their company, to make their company grow. One of them is actually to offer shares of their company in return for capital. So what they're willing to do is that to give a little bit of their ownership away in return for your money that you'll be loaning them. And what they do is that they will register themselves with the PSE so that investors can invest their money into these companies. So when I say about BDO, Jollibee, Ayala Land, these are all common shares. And that's how they started. They started as a company, registered with the PSE, giving out shares in return for investors' money. Now, what should you consider when investing in common shares? So please have this guide, and it's called the GEMS. So out of all the 300 companies that are listed in the PSE, you have to filter them out wherein you only choose the good ones that have these gems. G would stand for it is a growing industry. Is the business sector doing well? Are there any hindrances to its growth? E, does it have earnings growth? Is the company making good money? Are the profits continuing? And do they have recurring income? M, management credibility. Are the managers credible expert in their field? Do you like them? Do you like how they make decisions? And how often do they get troubled by problems? And last, do they have a superior products and service? I remember that there was this one article I read years ago that there was a common housewife who was buying shares of the product that she is buying in the grocery stores. So when, for example, she was buying a certain brand of food, certain brand of beauty products, those are the companies that she bought. And then when she passed away, her heirs were actually quite surprised to find out that she had shares of these companies that already became very, very big, which actually made this woman into a multimillionaire without even realizing it, because she was buying companies that had superior products and services. So whenever you are thinking of buying a common share, go through this checklist. So for example, okay, so let's take, for example, Jollibee. If Jollibee is a company that you are interested in buying or being a co-owner of, look at the gems if they have it. Is Jollibee growing? Okay. So read through it. Is Jollibee having more locations? Are they expanding locally and globally? Are they Are they expanding their brand into different companies? Are they acquiring companies? So there. Next, are they earning? Is their earning recurring as well? Meaning, even though when times are tough, people are still buying their products. No? Management credibility. Do you like how they make decisions? Were their past decision, did it pay off? Okay? When they were expanding or during even the pandemic, did they make right decisions during these times? Then finally, do they have a superior product and service? Are you yourself a customer of Jollibee? Do you like their products? Is that something that you can live without or not? Huh? So if you will be buying a company, go through this checklist. So if the company has 0 out of the 4, forget it. Take a look at other companies. If they have 1, try to see if there's a better company out there. 2, it's so-so, it's not so exciting. 3, that's a nice business to put your hard-earned money in. But if it's a 4, it's a great company, and this is what you want to hold on to. Okay, so just have this rating. Now, if you are having trouble getting information for the company that you are interested in PSE, they do have a lot of information about companies that are listed with them. Or if you have a COL account, you can check out our research to know more about the companies that you would want to invest in. Okay. Now, why should we consider common shares? It is because it has a potential for price appreciation and growth. For example, I even came across Jollibee when it was like, sorry, I don't want to reveal my age, when it was, Jollibee was still in the 2 digits before, so less than 100 peso. Naabutan ko pa siya noon. But I remember that one of the lowest prices I've seen for Jollibee is about 120 pesos per share. And right now, they're doing about 230, 250. Yeah, so that's potential for price appreciation. Tremendous growth talaga yan. Now, maganda rin dito is that they have liquidity. So when you say liquidity, this is your ability to convert an asset into cash. So with Jollibee, since this is being traded every day, you can actually sell this stock at any time. There's no holding period. Whenever you need it, you can sell it if you need it. And last is, this is what I like the most, is that you became a shareholder to the company. So for example, if I were to buy BDO shares, I can actually go to a BDO branch and feel like it's also my bank, right? So when you become a shareholder, you really partake in part of their profits, as well as you are a co-owner of that company. And now let's go to REITs. Okay. So for REITs, this started in about 2020 during the pandemic. So it's about 4 years now that there are REITs in the market. And REITs would stand for Real Estate Investment Trust. So what exactly is this? So this is when a company has real estate assets. So these will be your buildings, your malls, your office buildings, your residential lots. And what they do is that they put all these land assets into one company that they call a REIT. Now, once they put this real estate into this company, what they will do is that they will list it with the PSE and now offer it to investors. So how do they work? Is that when these buildings get rental income from their tenants, what they do is that they would accumulate that minus all the costs that they have to run these buildings, but whatever's left, 90% of it will be given out as a dividend payout. Now, the 90%, that is the least number. There are some REIT companies that actually can give out 95% of their net income as a dividend payout to shareholders. Yeah. So the good thing about this is that we have very strict rules on what real estate assets can actually go into a REIT company, such as the real estate asset should have a good historical performance, it should have a recurring rental income, and then it is very little vacancy rate. Ganyan. So it has to be a good real estate asset to be put into the REIT. Yeah. So what are the COL top picks for REITs? So there's about, I think about 9 REITs right now, but here are the top 3 that we recommend or pick. A REIT would be, it stands for Ayala REIT, actually. So when you say REIT sponsor, these are companies, real estate asset that they put into this REIT. So when you say A REIT, you're actually buying Ayala land buildings or malls or office or even industrial. Okay. The REIT type will tell you what sort of real estate assets do they put in. The good thing about Ayala Land is that they put in quite a variety of their real estate. They have office, retail, that will be their mall, industrial, even. Okay. So this can be like techno parks. And then the estimated dividend share for 2024. So this is for the whole year. Usually REITs kasi give out dividends every quarter. So once every 3 months. So if you add them all up, it may come out to 2 pesos and 27 cents for every one share that you have. Now, how do we come up with the estimated dividend share? We take a look at how much they gave last year and how much they already gave for the year, and already estimated how much they'll give for the fourth quarter. So the estimate here, I already put in 3 quarters dividend in, and then I just estimated the fourth dividend quarter based on the last one. Yes. And then the dividend yield here, this is how you compute for this, is how much dividend will you get divided by the price of the stock you bought it at. So if you're just going to buy the stock, the closest price that you have to put in was yesterday's price. So here, this is 2 pesos 27 cents divided by the price as of yesterday for a REIT. And that comes out to giving you a dividend yield of 5.92%. So that means if you put in let's say 100,000, your dividend yield is 5% of that, which is about 5,000. Yeah. So that's how you look what a dividend yield is. This actually gives you how much you're going to earn for the year on dividend alone. So CREIT, this is Citicorp Renewable Energy. So one good thing about this is that for CREIT, it's also very, very unique. We're in. They put in land, Citicorp put in their land assets here that they rent out to solar companies. So the land here that they are putting in the REIT are solar farms. And then the rental income that they're getting are from these solar companies who are renting their land to create this solar energy. So they can give out about 20 cents for the year, and that will give you a dividend yield with the price yesterday of about 6.56%. And lastly, RCR. So this would be Robinson's Corporation REIT. Okay. So the REIT sponsor here is Robinson's Land, and they put in their office buildings inside RCR. So an estimated dividend per share is about 40 cents. So with 40 cents, with their price yesterday, it will give you about 6.54% dividend yield. So the dividend yield is actually quite nice. Okay. Now, what do you consider when you're going to invest in REITs? First, take a look at the dividend yield. Is this something worth waiting for? It's 5%, 6%, good. Now, what you do with dividend yield is that I usually compare them with the banks, with their interest rates, as well as I'm also comparing them to my other investments to see whether this is actually higher than what I usually get. Then growth or injection of asset, we also like a REIT that has the potential to grow, meaning do they have other assets that they can inject into the REIT company? So for a REIT, they still have about 750,000 square meters of real estate that they can put in. C REIT still has 33 hectares of land that they can inject. And for RCR, they still have 180,000 square meters of office space that they can put into their REIT. So we like this because when they inject more real estate assets into the REIT, they can actually increase your dividends over time. And finally, I take a look at the reputable company, the sponsor company. Do we like the companies that are managing these real estate assets, such as Ayala Land, Citicorp, or Robinson's Land? Now, why should we consider REITs? It is because REITs are required to give out at least 90% of their net income as dividends. So this is really good for us because for me, it is sort of like this is the most affordable way for me to partake in a real estate investment without me having to go through the paperwork of buying it or even managing the plan. Just by buying the REITs, I can already partake in it. So it kind of feels like made it easier for me to invest in real estate. So it's quite affordable. And also it has a potential for price appreciation, meaning if their dividend yields are quite nice, people tend to buy them a lot. That pushes the price up. And so that is it for REITs. Okay. Now for preferred shares naman. So this may be something that you may not be familiar with, but recently a lot of companies are going through this route to actually garner more capital for their companies. So what are preferred shares? Preferred shares are also stocks that you can see in the PSE that you can buy and sell in the market. But what makes them different is that these are shares wherein the company gave them out in return for dividends, in return for your money that you will loan them. So it's sort of like a loan type wherein you will loan them the money and in return, they will give you a fixed dividend in return. Okay. So what's a nice thing about this is that the dividends are fixed. Okay. But of course, there are some things for you to take note of, such as how it works. So for preferred share, when they're paying out dividends to shareholders, you actually have to look at how long will they be doing this for you. There are two kinds. There are perpetual shares, would mean that they will continue to give you dividends for a no limit amount of time. But there are also shares, what they have is what they have a callable option, meaning the company will be able to buy back the shares at the issuance price. So for example, if this company had issued it at 1,000 pesos per share, they can actually put into the terms that in 5 years from now, with the dividend rate that I'm giving you, I can actually buy back that preferred share at 1,000 pesos per share as well. So here are the most recent preferred share that you can consider. So they have just started this year. ACPB3, this is actually the most recent one. It's just on the offering stage. It will be listed on October 15. But the good thing about this is that it is cumulative, which means that even though if this company would skip a dividend payout, once they will be able to pay you, they will pay all the dividends that they've skipped before. So we like that. Cumulative preferred share is really the way to go. That means even though they skip, you are still entitled to any dividend that they will give out later. So they'll make up for it. Okay. And then the callable time will tell you how long you need to hold on to this, because at any time after the callable year, they can actually buy it back from you. So for ACPB3, they have an issuance price of 2,000 pesos per share. And then with a dividend annually that they'll give you. So usually preferred shares like REITs, they give this to you on a quarterly basis. So, but if you were to add the 4 dividend payout, it may amount to about 121 peso per share, which gives you about a 6% dividend yield for the 2,000 pesos that you'll be shelling out. For Petron Core Preferred Share 4E, this is already listed in the market. You can actually buy this already in the market. It's also callable for 5 years. Issuance price of 1,000 pesos per share. I checked, right now it's a little bit above the 1,000, but it will give you about 71 pesos per share with a dividend yield of 7%. And then finally, there's SMC 2O. So this is series 2O, which will be callable in like about 7 years. So because the callable time is longer, 7 years, they usually make up for it by a higher dividend yield. That's why their dividend yield is about 8%. Okay. So as you can see here, there are a lot of preferred share options. For me, preferred share is actually very useful because it gives you a guaranteed dividend yield in return. But please make sure, get the cumulative one. Don't get preferred shares that are non-cumulative. Okay. Now, what to consider aside from the dividend yield? Take a look at when they'll be able to call it back. So this kind of tells you how long your money will get stuck with them, or until how long will they be giving you dividends as well. So 5 years for me is usually the normal callable time. 7 years is 2 years more than the usual. Shortest I've seen is about 3 years. Yeah. Then risk here, take a look at the companies themselves as well. As you can see, the more stable the company, the lower the dividend yield they usually give out. Because for more riskier companies, they have a higher dividend yield to make up for the risk that you'll be taking on. So what should you consider with preferred shares? The good thing about this is that it's sort of like a hybrid of fixed income and stock. So when you say fixed income, this is similar to bank products wherein you lend the money and then they'll give you a fixed interest rate in return. So that's what we mean by fixed income. So it's a mix because the dividend rate is already fixed for preferred share. But the good thing about this is that it's not like a time deposit wherein you'll need to hold on to it for a certain time. You can actually trade it whenever you like in the market once you need it. So you don't even have to wait for the callable period. You can actually sell it already in the market if you need the money. And then next is that it's quite flexible in liquidity compared to a fixed income. So for example, time deposit, you are sort of locked in already. But here, there's that flexibility. You can sell it when you need. And then finally, it has the ability for capital preservation because usually when they buy it back from you, it's at the issuance price. So if you're able to buy it during issuance or during IPO, so let's say at 1,000 pesos, they'll buy it back from you 5 years from now at 1,000 pesos as well. So there's that bit of capital preservation there. Okay. And finally, so your highest rating are the dividend paying funds. So what exactly is dividend paying funds? So this is when fund houses or asset management companies would register themselves with the SEC. And once they have been approved by SEC, they can now create a fund that has different investment or assets inside it. So for me, I kind of look at this as sort of like buying a value meal. So whenever you go to McDonald's or Jollibee, you can actually buy a la carte, one at a time. You can choose what you like, make your own. That's fine. But they already have what they call value meals, wherein they package their product already to have different investments or different products inside it that should complement each other, and they can actually give it to you at a more affordable price. So that is for me sort of like what a fund is. It's me buying a product, but inside it, it has a lot of different products already that was curated for me or for this fund. Yeah. So once they create that, so for example, this fund house registered with the SEC, SEC gave their go signal, they can now buy different assets based on what they registered with the SEC. They can buy stocks inside it, they can buy fixed income, or it can be time deposit, they can put in, they can buy bonds with it, loans, government, private. It's up to the fund houses how they're going to build that. And then later on, they will actually give it for distribution to a certified investment solicitor. Okay. So these are licensed individuals that can sell funds, and they can now sell it with investors. So how exactly does the dividend work here? Is that these assets can actually accumulate dividends, and then fund houses will decide how much to pay out in dividends. So when they do pay out, they give them straight to shareholders. So here are a list of dividend paying funds that you can consider, and these are the ones that are available in the COL platform. But here are, we partnered with quite different fund houses, but I'm pretty sure there are more than what we have here as well with other companies. But here we have 7, wherein they are managed by different fund houses. They have different types of assets inside it and different payout schedules. So I'll go through the very first row. So the very first row is Manulife Global Multi-Asset Diversified Income Feeder Fund. I'm sorry, it's a bit long to say, but that's how they really title their funds. It's quite long to give you an idea what's inside it. So now they give you a clue here that it's a global, meaning this is not just invested in the Philippines. It can actually be outside the Philippines. Multi-asset, that means it can be stocks or it can be fixed income, loans, or time deposits as well. Then income feeder fund. So that tells you that it aims to provide an income for you. That is why this has a dividend payout schedule of monthly. Every month they give out a dividend. Now, what you should take into consideration is the risk rating. Okay, the higher the rating, the higher the risk. So this is actually 7 out of 8. The fund type is balanced, which means it's a mix of fixed income and equities. And last is the latest annualized dividend yield. It gave about 6.2% if you add all the monthly payments out. So here is a list of 7. So don't worry, you don't have to memorize this. We'll give this to you later on. But what I would want you to check out is that for every fund, please take a look at what they invest in. Now, this is, of course, harder to get, but every fund should have what they call a fund fact sheet. It's a sheet for investors that will actually state what they invested in. They have to be very transparent with you. So here, for the Manulife Global Multi-Asset Fund, that gives you a 6.2 dividend yield, 27% of their assets is actually invested in high-yield bonds. Bonds are loans. Okay? So loans that actually give them a high interest rate in return. 24% are in equity-related securities. So this can be stocks. Okay? These are basically stocks, actually, equity-related securities. And then 22% are in developed market equities. So that means this is usually in the first world equities. This can be the US or the China. Yeah. So I also like to take a look at fees, of course, because the fees kind of tell me is how the higher it is, of course, it's not as nice. So the lower it is, the more advantageous that is for you, because that would mean that are less fees that they're getting from any dividend that they're paying out for you. Okay. So these fees are called management fees. These are fees for the whole year for this fund so that they will manage whatever is the investment asset inside it. So you don't actually have to pay this when you're buying or selling. It's already computed inside the price, sort of like it's already a fee inclusive type of price. There. So the second one would be the Manulife Global Preferred Income Fund. Very interesting. 27% is invested in electric sector. When you say electric sector, these are your utility that provides electricity. Okay, but since this is global, this is not within the Philippines. It's actually overseas. You want companies that actually give out or their equivalent of Meralco for other countries. Then 25% are in the banking sector, 16% is in the insurance sector. Yeah. And then the third sample I have here is the Global Multi-Asset Income Fund by ALFM. Okay, so what they did was that 51% are in fixed income. So these are your time deposits or loans and bonds. 41% are in equities. And then when you look at their geographical asset, 75% are invested in the North American fixed income and equities. 20% are in Europe. So what I like about the global funds is that it gives you an ability to actually invest outside the Philippines in a very easy and affordable way. Yeah. So why should you consider dividend paying funds? It is because it's quite diversified. It's already a lot of product inside it for you, even if you buy just one fund. It's also diversified in regional exposure, which means that you don't have to be tied up in only one country. It can be multiple countries. And what I like most about is the liquidity, meaning, for example, you were able to accumulate a lot of funds already, meaning a lot of shares of this fund. You managed to put in every month, and then after 20 years, you managed to amass a huge amount of funds. The good thing about a mutual fund or a fund is that whenever you're going to sell it, the fund house is the one who's going to buy from you. So you don't actually have to look for somebody to sell it to. Fund houses will buy it back from you. So ang maganda dito is that when you're buying from the fund house. When you're selling it back to the fund house as well. So you can actually sell them all in one go, all at one price to the fund house. Yan. Okay. So now that I've talked about all 4 options for you, okay, now I would want you to go through a practical exam with me. Because with all these choices, I want you to actually know which investment will actually give you a very nice dividend yield. Okay, so I'll give you an example here. So the first column is my example for the practical exam, but the rest, you may need to fill it out on your own. Okay, so first, let's go to the first column, which is Globe. This is Globe, which is a telco company, common shares in the Philippines. So it gives out a dividend payout of quarterly. So that means 4 times a year at 25 pesos per quarter. So the total annual dividend per share is actually 25 times 4 because there are 4 quarters in a year. They will actually give out 100 pesos for every share that you have. So if you bought it yesterday at the price of 2,420, what is your dividend yield? So how to compute for it? Okay, there's the formula below. So what you do lang is that the annual dividend per share, which is 100 pesos, divided by the price you bought it at, or the current market price, which is 2,420. Okay, divide that. And then multiply it by 100 to get the percent. So when you multiply by 100, it will give you 4.13% dividend yield in return. And this is on an annual basis. So for your practical exam, what I want you to do is that there are now 4 columns on the side. Meralco, CREIT, ACP B3, so that's a preferred share. And then last is ALFM, Global Multi-Asset Income Fund. I put down their dividend payout, how many times that they gave out, how much dividend per share that they gave out. Now, what you have to do is please add them up to get you the total annual dividend per share. Divide that by the current market price, multiplied by 100 to get the dividend yield. The question is, which among these 4 has the highest dividend yield? So I'll give you a few minutes to go over this. Use your pen and paper and your calculator. Okay, here. So please type in the total annual dividend per share so that you can compute for the dividend yield. And what I'll ask you later is that which among these 4 choices gave out the highest annual dividend yield? So I'm happy to see that 67% of you have chosen CREIT as the one with the highest dividend yield, while there were some for Meralco, ACPB3, and ALFM. Okay, so now let's go through the next slide to find out what is the correct answer. The correct answer is CREIT. So congratulations for those who answered CREIT. You passed your practical exam. For those who were not able to answer it correctly, don't worry. Okay, you just need to review the answers here so that later on, if you would have any investment that you'd like to invest with, you can now compute for the dividend yield. So here, how did we do it? So for Meralco, we totaled the March and August dividend per share. That comes out to about 21 pesos and 53 cents, divided by 481 times 100 to get a 4.4%. For CREIT, add all the 4 to come out with 0.201, and you divide it by the current market price of 3 pesos and 5 cents for CREIT, which garners you about a 6.59% dividend yield. For ACPB3, it's 30 pesos per quarter. So what you do is multiply that by 4 to come out with 121 pesos. and 0.076 divided by 2,000, that will come out with about a 6.05%. And finally, for ALFM, with an average of about 0.2092 per month, you multiply that by 12 because it's a monthly payout, okay, to come out with a total annual dividend per share of 2 pesos and 51 cents divided by 45 pesos, 0.0525 to come out with 5.57% dividend yield in return. Okay. So these are, so here, C-REIT would be the winner for this practical exam. Okay. So I hope that everyone was able to go through the practical exam so that you can actually compute for your own dividend yield. But just a recap, I would like to show a comparison table that shows you all the four. What are their main purpose? Dividends given, advantage, and risk. So for example, for common shares, its main purpose is really capital appreciation. Dividend was an extra that they will give out. But the good thing about this is that these are excess cash that the company gives you, that gives you an advantage that it has a higher growth potential for price appreciation. But your risk here is that the price may fluctuate and dividends are not guaranteed. For REITs, they're really a dividend purpose with a secondary for capital appreciation. The dividends that they give out is 90% of their net income, at least. Now, the good thing about REITs is that not only is it for dividend, but it has a potential for price appreciation as well. And of course, the risk is, since it's traded in the market, it does have price fluctuations and dividends can decrease. For preferred share, the main purpose is still, again, dividends. Very little yan for capital appreciation because it's usually a little bit more for capital preservation. So it has, the good thing about this is that it has a fixed dividend percent based on the issuance price. And of course, for the risk, please only choose the companies that are giving out cumulative preferred shares and not non-cumulative. We also want to stay away from companies who defer dividends. And finally, for dividend paying funds, this main purpose of this one is for dividend, but it still has capital appreciation as well. So the dividends that it gives out are from dividends that it had accumulated where the fund house had decided to be released to shareholders. The advantage for this one is really the diversification because there's a lot of assets inside with just one fund, and it has a potential for price appreciation as well. The risk here is that, like the market, the price does fluctuate and the dividends can decrease as well. So as a summary, when adding dividend-paying investments, it will definitely help you while waiting for price appreciation to happen. So definitely during tough times, dividend would save you. Hey, so dividend investing options can be your common shares, your REITs, preferred share, and dividend-paying fund. Now, for common shares, don't forget to do your GEMS checklist and take a look at the dividend yield. For REITs, don't forget to check if that REIT has growth and it comes from a reputable company. For preferred shares, take a look at the callable date as well as the risk, meaning the one who issued the company, are they good? And do they actually meet out their dividend obligation or promise? And finally, for dividend-paying funds, please consider where the assets are invested in, okay? And the fees as well. The lower the fees, the better. Okay, so here, my final poll question for everyone is that, which among the four were you able to learn a lot about for this session? So which investment did you learn the most today? So you can actually choose one or all of the above if you like, but this gives me an idea whether a certain portion was very clear and did it meet your expectations or answer your questions. So here, just answer, and then when everyone's done, okay, we'll show the survey result. Okay, so let's show the survey result for everyone. Okay, so very happy to see more than half of you, 55% says all of the above, that you were able to learn a lot. Then about 90% said that they learned about REITs, with 13% learned a lot about dividend paying funds, and what about the others, preferred share and common shares with a little bit. So this, I'm very happy to see this. It's because you really did or want or request, or you are most interested in dividend paying funds and in REITs. And I'm happy to see here that at least majority of you was able to learn a lot about those two. Okay. So before I end, I just like to show or share with everyone my own investing journey. So this was not something that I learned 20 years ago. This is actually something that was really jarring for me, especially during the pandemic time. So I'd like to show you this. So this is my own investment journey wherein when in 2020, when A-REIT first came out, and this was the first REIT IPO, it debuted in August. So what I did was that I allocated my amount of money, about 100,000 of my money, to buy about 3,700 shares of A-REIT in 2020. And this was during the pandemic time, wherein market was so volatile, and there were times wherein market wasn't moving at all, especially during last year to early part of this year. But what I did was that I kind of plotted out how much dividend is A-REIT giving me. And I noticed that every quarter they were consistent in giving out their dividends. Not only that, as you can see in this table, over time they were actually increasing it. They started giving me about 1,100 for every quarter, and now they are already in 1,800 per quarter. So if I were to compute my dividend yield, I started with about a 5.6%, and now it's now all the way to 7.4% if I divide it by the cost or how much money I put into AV. Now, my investing journey is very similar to a lot of you, that it may have its ups and downs, really, especially during times when it's really, really tough, when there's nothing moving in the market. But Dividend was able to help me weather this storm. It kept me patient. It kept me stayed in as an investor. It made me still have hope. And now that the market is rallying a little bit, or actually rallied a lot, I can definitely see that I'm still here today as an investor because Dividend was able to help me be patient. Yeah. So I would like to end my seminar with this one. It's like, if you like for more investing webinars, you can just go to COL Financial website. We still have a couple of webinars that you might be interested in, such as Investing Made Easy with a fund that our investment team came out with, and also fun talks about strategies for new investors. Also, COL Financial, I'd like to introduce my company here that I'm very happy to be part of this company, is that it started actually in 1999. So we're already celebrating our 25th year here. We are the #1 online broker here in the Philippines. We started actually as Citysec Online. You may have heard of that, but now we are COL Financial. We have grown as well over the years. But I'm very happy to say that what I love most about my company is that we really have a belief or a vision that we think everyone deserves to be rich. And I really do believe that as well. That's why I really do take my time to do webinars like this. So if you would want to start investing with COL, very, very easy. Just go to this bit.ly link. And then all you have to do is prepare your ID, some of your details. And then you just need to fund it. And whatever you fund in, there is no fee to open an account. 100% of that fund will actually go to any investment that you'd like to choose. So you can fund it with any of our partnered banks. We have 3 different kinds of account. From experience, a lot of people start with starter, but eventually work their way up to plus. It's because with plus, you get all the benefits of the COL account. You can also start here right away if you like. But if you are still unsure, you can start small, build your way up. And then finally, we also released this year our TikTok channel. So very, very engaging to. Even I find it very nice to, I always look forward to the new videos that my colleagues will come out here, but it definitely gives you some tips for your investing journey. And I'd like to say thank you everyone for your time with me, and I hope you learned a lot. So if ever you have any questions, especially with COL Financial, we have an email. We also have a live chat. So just chat with us between 8 to 4 p.m. And I have a team dedicated to answer any of your inquiries. Amen. So I like to give the mic back to Kami. Okay. So here, this is where I end, but then later on, we'll answer some of the Q&A questions.
Thank you so much, Miss Joy, for your presentation. So before we proceed to the Q&A segment, we'd like to remind everyone to exercise extreme caution and vigilance in dealing with companies or individuals soliciting stock investments, especially those that promise guaranteed returns. There are also fraudulent social media accounts that use PSE's name and logo in their pages and announcements. For stock investments, only deal with PSE accredited stock brokerage firms. A list of these accredited brokers are available on the official website of PSE. You may report any similar case by sending an email to PSE's information desk via info@pse.com.ph. It's unfortunate that we continue to receive reports of scams that's a reality. We can probably start our Q&A with that. So the idea of getting 55 to 80% returns in a few weeks grabbed the attention of the public. So the impulse is to put in money right away without understanding what they're getting into. They invest with high hopes only to be disheartened because they eventually realize that they were scammed. So Miss Joyce, what reminders can you give those who are watching this webinar about these too good to be true investments? After you answer this, you may proceed with the questions sent through the Q&A box and Facebook.
Okay. So when it comes to this, really, two things that you have to be vigilant with. One, when they ask you to deposit funds into any personal account with their name on it, please don't do it. Here with us, with companies, we try to make sure that whenever you're funding your account or giving money, it always goes through a corporate account. It goes through the company. It doesn't go to any personal accounts. Please make sure you just don't send that to any personal account, because once they have it, yeah, they can do whatever they would want with it. Even if they tell you that they're authorized representatives, even if they tell you that your money is safe, but then they ask you to fund it in a personal account, please don't do that. Okay? Second, you can always reach out to companies. We are also quite approachable. You can ask questions. It's for us, we like that about clients. Sometimes they would ask us, for example, is Mr. So and so part of your company? Or is this something that is legit? We answer that for you right away. You can confirm with us, reach out to us. And what we do is that PSE and SEC, they made sure they have these rules wherein any authorized representative, their picture, their name is always on our website. It's available to the public so they know who's registered and who's not. And they also make sure that we have information for any investors wherein we should be able to answer any of your inquiries right then and there. Okay, so don't feel shy, chat with us, email us, ask anyone. If you know anyone in COL, just ask them if this is something legit or not, if this person is legit or not. Then we'll answer you straight away. Yeah. So there are always two things that you can do. Okay, so this is really to exercise caution so that your hard-earned money will really stay with you. Okay. So let's now proceed to the Q&A portion. I believe there's a couple of open questions here in the Q&A tab. So please, everyone, if you can just open your Q&A tab so you can go through it with me, okay, while I answer these questions. So, okay, first question here is, what should dividend investors do when the stocks in their watch list have gone up so high already beyond our buy ranges and the dividend yields go down? Should we just wait for pullback? Or what can be a better strategy than waiting for months and maybe even years for the price to pull back to our desired level? Okay, let me answer this first before the next question. Okay, it actually depends on what kind of investor you are, if you are a long-term investor or a short-term. But this is a good problem. So if the price has already gone up so much, what you can do is actually you can sell a portion of it. We call that profit taking. So you don't have to sell everything. You can sell a portion of it to lock in your profits already. Right? That's one thing you can do, especially if you're a short-term investor. Now, if you're a long-term investor, what you can do is that if you don't need the money, you can just keep it there. Any dividend that you have, you can reinvest it. However, if you'd like to take in profits, you can do so, right? But again, you don't have to sell the whole thing, just a portion of it to just lock in your profits. So when do you buy back? For me, actually, one ways to buy back is that when I take a look at the price and it had gone down to where it was before. So usually if you look at the price, it's sort of like a mountain. So after it going up, it will go down. Once it's down, just make sure that the company is not in trouble. And then when the price goes down to a more desirable level, that's the time you buy. Now, if it doesn't want to go back down and you think that you don't want to get into it, it's actually quite a strong company. Sometimes for me, even, for example, I told you the cheapest price I've seen for Jollibee is about 120 pesos per share. What are the chances that I'll see that again? Very, very small. So what I do is that I don't actually wait for it to go back down to 120. So what I do is that if it goes up, you can sell a portion of that, but then you will see that it can go down all the way up to about, let's say it's 230 now, it can go down to about 200. There you can already start buying little and by little already. Don't have to wait for the 120. Okay? So here, I hope I was able to answer your questions. When it goes high, you can lock in your profits by selling a portion of it, especially if you're a short-term investor. And then when do you buy back? You buy back actually when the price goes down to a bit of your desired level, but please adjust your expectation accordingly. Also, you can also buy it back when things are pretty quiet. If you will see the price of this stock, when it's quiet, it tends to go sideways. You can buy it then, if you like. Okay, and the last question he has here is, another question is, how and when do we adjust our buy ranges? Okay, I actually adjust it based on market as well. Markets are good, your buy ranges will actually be higher, but when markets are bad, your buy ranges are actually lower. Okay, so that's how I adjust it. I hope I was able to answer that, but there's also no harm in if you want to hold it for years and years. But it seems like your question seems to be more of a short-term investing. So that's what you can do. Don't forget, you can sell portions by portions. You can also buy portions by portions. You don't have to buy it all at one go. I don't do that as well. What I do is that if I think the price is already good, I buy a little. So if the stock goes down further, then I buy a little again and again. I don't actually buy all in one go. It's too risky for me. Okay. Next question, sample of P Core computation and how the oil industry works. Okay, I think this one is a bit more in depth, but if you want to know about P Core, we do have research on it, but only a little. But how the oil industry works, you don't need to know all the nitty gritty to be an investor of it. But what I do like to see is their financial statements, whether they're earning or not. For P Core, for me, when you say sample computation, I would give you the P Core preferred computation. So what you do is that you get the dividend, it's quarterly, you multiply that by 4 to get the annual divided by the current price. That's how you get your dividend yield. But as a common share, there are a lot that are actually doing better because right now, oil industry is, it depends if you are an importer or you yourself are in the exploration and drilling part of the oil industry. It's very, very different. Okay, so here with PCOR, we really have to take a look more in depth. But I think here, this is more of a refinery, if I'm not mistaken. Okay. And then to compute for the preferred share, same with the dividend yield for your practical exam. There. I hope I was able to answer that. Okay, next question. What are the sample stocks that regularly give dividends? Okay. Sectors that actually give out regular dividends are actually your telcos and your utilities. They're the ones who give you a very predictable dividend. The rest, they give you a lower amount of dividends, such as real estate and banks. Well, banks is actually on the mid-level. Real estate a little bit lower because their companies are very cash type. They need a lot of cash to keep expanding their companies, so they may not have as much excess cash. But the ones that gives out regular dividends quite high would be your telcos and your utilities. Okay. Okay, next question, sorry. Is it generally practical in terms of returns to buy and sell stocks only to get dividends? Buying stocks before exiting, then selling it right after receiving the dividends. Okay. Practicality wise, I do have a couple of clients who does this, but the ones who earn more are actually the ones who buy it way before the ex-div date, because on the ex-div date, usually there is that selling, the price will correct, it will go down. So I don't usually buy it the day before, then sell on the X date right away. I usually buy it way before the ex-div date, especially when you know it's quite a high dividend. And then what you can do is that you sell it afterwards when the price is high as well. There are times wherein I run after a stock because of its dividend, because it's actually giving out quite a nice one. So for example, Metrobank actually gave out a very, very nice dividend, because aside from its regular dividend, it gave out a special dividend. So what a lot of people did was that when they found out about it, they were already buying it way before the ex-div date. And then later on, you can sell it when you think that the price have already gone up. Sometimes your price appreciation may get you more than what you're going to get in dividends, but I don't like to do it on the last day, because the last day is when a lot of people buy it up. The price is already quite high for me. So there's not a lot of price appreciation I'm going to get. And then the dividend yield will also be a bit lower because you bought it high. Okay. I do have people who do it, but my suggestion is buy it way before the ex-div date, especially if it's a good dividend yield. Okay, next question. How can I effectively invest in dividend-paying stocks considering I already have investments in equity index funds? Okay. Is it necessary to invest specifically in dividends, or are my current investments sufficient? Actually, this is hard because I don't actually get to see your whole portfolio. But what you can do is that you can consider not adding more to your equity index, but rather putting it in a dividend-paying stock if your objective is to get more dividend-bearing investments inside your portfolio. So you can do that. It's nice to have a mix for me, but of course, having a dividend-paying stock or fund gives you an additional advantage, because especially if you're a long-term investor, that dividend, when you keep adding that up, that's quite a big amount. So for me, you don't have to sell your equity index, but you can add into your funds more of your dividend-paying funds, if you like, or dividend-paying stocks. It's nice to have a mix for me. Okay, next question. I see here. Okay, how would you research for these gems? Through the company's information sheet or word of mouth? Okay, for me, I don't do it word of mouth. The reason is because although I try to use my own observation, the information sheet is generally more objective. Like, for example, when you see it in the newspaper, headlines can be quite catchy, but I like to see their financial statements. I like to see whether it's growing or not year on year. If you want this kind of information sheet, In COL, we do have that. We call that earnings report. We do that for every company we cover. So that's about 50 plus companies. Another thing that you can do is that you can go to the website of that company. Every PSE listed company have a page called an investor relations page. Go through it because they are required to do monthly, quarterly, and annual reports. There, you can actually see whether these companies are growing year on year. You can compare them. So for me, hard data is actually very good to compare to research for the gems. Yeah. Okay, next question. So about REITs, regarding price appreciation, they are mandated by law to distribute 90% of its income as dividend. Is it correct to say that its price growth will be slower compared to other common stocks? Okay. Actually, from my experience, the ones that investors like REITs the most, meaning the top pick REITs, they're actually have a price growth steady because their price growth is actually based on how much dividends that they were giving out. Since the top three picks that I told you, what they did was that they were injecting assets over the years and they were increasing their dividends per share over the years. A lot of investors kept buying into it, and then a lot were not selling because they wanted the dividend. So it kind of stabilized the price. It's not actually slower compared to other common stocks. It's actually less volatile because a lot of investors for REITs held onto it. They weren't short-term investors. They were long-term investors because they wanted all the dividends that it could give. And if you want to get that quarterly dividend, you have to at least hold it for 3 months. There. So for me, it didn't affect the price growth. It did slow it down, but it made it stable. Okay. And then it depends on what common stocks that you will compare it to, but common stocks are really more volatile. They can really go high up, high down. So there's really that high growth potential compared to a REIT that was kind of steady over time. So for me, I like the REITs, even though its price is not as volatile as a common stock. But I do also have common stocks that I buy based for price appreciation. So you can mix it up. But for me, don't buy a REIT and then buy Ayala Land. For me, it's sort of the same. So what you can do is that you can buy a REIT and then you can buy a different kind of common stock, like for example, Meralco, which is totally different, right? So you can do it that way. Okay, next question. What is considered very good dividend rate? Okay, so the dividend rate, what you do is that you compare to the banks how much you're getting. For me, anything above a 4% is actually quite good now. So for example, if your bank is giving you about a 3 to 4% interest rate, anything higher than that, 5 or 6 is actually quite nice. Anything higher than 6 is very, very nice, 7 to 8. Yeah, so that is for the current market as of now. But of course, before, when the interest rates were very low, around 1 to 2%, anything higher than 1 to 2% is already quite great. Yeah? But now it's about 5 onwards for me. Okay, next question. SCC is one stock that gives generous dividends. Do you think they will announce a special dividend this month? Coal prices? Actually, SCC is actually very generous. Yeah? Now, again, with special dividends, it's not something that we can anticipate. I'm actually not sure if they'll be giving as high as they did last year. For me, maybe might be the same as last year. But parang I haven't really heard whether they'll be giving something extraordinary for this year. I haven't heard. But I'm not sure until they announce. Yeah. Okay.
Thank you so much, Miss
Yeah.
Joyce, for
I think there
addressing the
is.
questions sent by our
Oo.
participants.
Ang
I'm
dami pa
sure,
nga questions
yes,
eh, no?
actually, ma'am. So we can just answer them via Viber, ma'am.
Okay.
Email,
Mm-mm.
sorry, email. So to everyone watching, if nabitin po kayo in our Q&A session, don't worry because you can contact us and our guest speaker for further follow-up questions. So the details can be found in the chat box. So you may also follow COL's webinar and social media pages for their upcoming stock market webinars for free. So once again, we'd like to say thank you to Ms. Joyce for sharing her knowledge on dividend investing. So before we end the session, we would like Ms. Joyce to share just one key takeaway or parting shot for our attendees today.
Okay. For key takeaway, for me, there's always more than one way whenever you're doing your investment. So that's why dividend investing for me is actually something you should definitely consider because it merges two strategies into one. And not only that, for me, as long as you try to invest your hard earned money, that should be able to at least give you a fighting chance against inflation and rising prices of goods and services. Investing is really easy, right? And it is for everyone. So please don't feel afraid of it. I think it's really worth your time and your money to start investing as soon as you can.
Thank you so much, Miss Joy, for your wonderful insight. And that is all the time we have for today. Maraming salamat po to all our viewers for today's webinar. We hope that you had a great time and learned a lot from our speaker. So if you enjoyed this webinar and want to stay updated with the latest stock market news, pwede niyo po kami i-follow sa aming social media platforms, the Philippine Stock Exchange on Facebook, Instagram, YouTube, and X. We'd also like to invite you to subscribe to PSE's Viber channel to get stock market disclosure updates. You can also visit the PSE Academy website at pseacademy.com.ph if you want to gain access to free tools that will help you study more about the stock market. You can also learn about our market education initiatives through this platform. PSE Academy keeps you posted on PSE events. You may also send other inquiries and reach PSE's Market Education Department via academy@pse.com.ph. Once again, thanks for tuning in. I'm Cami and enjoy what's left of your Thursday. Bye, everyone.